Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. What a fantastic opportunity we have today. We're going to really peel back the layers on one of the most recognized brands in the world, Starbucks. We've just immersed ourselves in their Q3 2025 earnings call.
That's right.
And let me tell you, this is far more than just sifting through financial statements. It's really getting into the soul of the company, revealing these foundational shifts and, the strategic decisions that are reshaping everything.
Everything from the stores to the employees, or partners as they call them.
Exactly, they're partners. And most importantly, your experience as a customer. The company has actually christened this ambitious undertaking their Back to Starbucks strategy. And we're going to unpack exactly what that means, where it's headed, and, why it really matters.
Yeah. Our mission today is really to distill the most impactful insights from this pretty extensive earnings call. We'll dissect the significant progress Starbucks has already made. Right. The specific challenges they are actively confronting and the compelling vision they've laid out for the future. Crucially, we'll be highlighting the why behind these, seismic changes, not just the what's.
Well, that's key, the why.
So by the end of this discussion, you'll have a clear, sort of nuanced understanding of the operational transformations underway, the exciting innovations just over the horizon.
Some really interesting stuff there.
Oh, yeah. And the financial performance that truly underpins this whole massive effort. It's a comprehensive look at a global brand in, a profound state of reinvention, you could say.
So let's kick things off with this pivotal Back to Starbucks strategy. The CEO, Brian Niccol, he spoke with palpable confidence, stating unequivocally that this plan is actually ahead of expectations.
Which is quite a statement, given the scale.
It really is. And he didn't just rattle off metrics. He emphasized a return to the very essence of what made Starbucks unique in the first place, right? That welcoming coffee house serving meticulously crafted fine coffee.
Made by skilled baristas. That human element.
Exactly, that human element. So if you've felt a shift in the Starbucks experience over the past few years, maybe, fewer seats, longer lines, or a less personal feel, this strategy is their direct answer.
It seems like it, a response to those frustrations.
The fundamental commitment to restoring the core of what defines the brand. Niccol, with his background, operational turnarounds at places like Chipotle, Taco Bell, he isn't just tweaking things.
No, this feels bigger, more structural.
He's orchestrating a deep structural reset. The goal seems to be creating a stronger, more resilient, and, consistently growing company. He sees this as building a better Starbucks.
A better Starbucks. Meaning what exactly? Like a gold standard?
Yeah, gold standard in customer service, partner experience, and ultimately financial performance. It's a big ambition.
Okay, so to give some financial context for these ambitious strategic investments, let's look at the core numbers for Q3 2025. Total company net revenue came in at $9.5 billion.
Okay.
However, global comparable store sales, that critical metric for same-store performance, showed a decline of 2%.
Oof, okay, a decline there.
Yeah, and the global operating margin was 10.1%, which is notably contracting. On a more positive note, though, global net new store growth continued at 4%.
So still expanding the footprint.
Still expanding. Earnings per share, or EPS, stood at $0.50. Now, it's crucial to understand that these financial results, particularly that comp sales decline and the margin contraction, they directly reflect the significant strategic investments Starbucks is making right now in this Back to Starbucks strategy.
So the spending is impacting the bottom line in the short term.
Exactly. When we talk about expense deleverage, which contributed to that margin contraction, it basically means their fixed costs like rent, or, in this quarter's case, that massive leadership conference.
That one-off event.
That one-off event for 14,000 managers, those costs are growing faster than their revenue right now. So even if sales are up slightly overall, the overhead isn't being spread across enough additional revenue.
Got it. So each dollar isn't as profitable as it was.
Precisely. It's a short-term squeeze as they invest for long-term growth and hopefully a healthier future. It's not necessarily a sign of fundamental wetness, more like growing pains.
That makes sense. And it's interesting when you look at that regional breakdown. While the overall numbers are clearly impacted by these investments, breaking it down starts to reveal, pockets of strength and where that turnaround effort is most concentrated.
Yeah, where the focus is.
In North America, Canada actually emerged as a real bright spot. They delivered their second consecutive quarter of positive comparable sales.
Good news for Canada.
Definitely. The U.S., on the other hand, saw that 2% decline in comparable sales we mentioned, but management is heavily emphasizing, this is just the early innings of a turnaround.
Right. They're saying momentum is building.
They are, week over week, they say. Internationally, though, the business achieved a record-breaking quarterly revenue for the first time ever.
Wow. Okay. So strong global performance.
Which is fantastic global validation for the brand. And China, a market that's, always under the microscope.
Oh.
They actually delivered 2 points of comparable sales growth and, get this, 6 points of transaction growth, showing robust activity and strong customer engagement over there.
That transaction growth is particularly interesting in China.
Mm-hmm.
But what's really insightful here is to look beyond just those top-line numbers and dive into the qualitative signs of progress.
The softer signals.
Exactly, which truly connect back to Starbucks plan's underlying goals. Let's start with partner engagement. They reported retail partner engagement scores are up.
Okay, that's important for morale.
Crucial.
Yeah.
And perhaps even more telling, coffeehouse leader engagement is nearing historic highs. This surge in engagement isn't just, a feel-good metric.
No, it has real impact.
It's the bedrock of Starbucks' entire third-place strategy, right?
Yeah.
When baristas feel supported and valued, that energy translates directly into the kind of genuine connection and meticulously crafted drinks that set Starbucks apart.
Right, from just any old coffee shop.
Exactly. It's about reigniting that human element, making each visit more than just a transaction. It's foundational, really, part of their brand DNA that no app or quick-serve competitor can just replicate.
So the internal health seems to be improving.
Seems so. We also saw hourly partner turnover at a much improved 49.1% and shift completion people actually showing up for their shifts at a remarkable 98.2%.
That's incredibly high for retail.
It is. These are crucial indicators of a healthier, more stable internal environment. It suggests the company's efforts to invest in its partners are starting to pay off, leading to more consistency in, your local store.
Okay, so partners are feeling better. What about customer perceptions?
Also looking up. Customer connection scores are up, and perhaps even more telling, complaints are down both quarter over quarter and year over year.
Fewer complaints is always a good sign.
It suggests customers are actively noticing and maybe appreciating the changes. Furthermore, customer value perceptions are near 2-year highs.
Value, even with premium pricing.
Apparently so. And this is especially significant considering Gen Z and millennials now make up over half their customer base.
Wow, over half.
Yeah. So this clearly indicates the brand is resonating strongly with younger demographics who are, let's face it, incredibly discerning about brand authenticity and value. It's a vital indicator for long-term growth.
Absolutely critical for relevance down the line.
And digging deeper into transaction trends, we're seeing some really promising shifts that indicate a potential turnaround. Company-operated coffee houses with positive full-day transaction comparisons.
Okay.
And positive morning transactions have improved for the third straight quarter.
Third quarter, so that's sustained improvement.
It suggests a fundamental shift in customer behavior, maybe moving away from some of that past softness. What's particularly noteworthy, I think, is that non-rewards customers delivered transaction growth year over year.
Non-rewards, so people not in the loyalty program.
Exactly. For the first time since the post-pandemic recovery. This is a huge deal because it indicates a broadening appeal beyond just the loyalists.
They're bringing new people in, not just relying on discounts.
Right. It's about attracting customers based on the core experience itself. And even their college and university license business saw low double-digit comparable sales growth.
Ah, so connecting with the younger crowd on campus, too.
Suggests renewed brand love there, which certainly bodes well for future loyalty.
That's a fascinating insight about the non-rewards customers. It really shows the improvements aren't just, reinforcing loyalty among existing members, but actually drawing in new foot traffic.
Which is absolutely critical for broader market share, long-term vitality.
Yeah. And let's not overlook Starbucks' inherent strengths, right? The things that differentiate it and how they're leveraging these to power this turnaround. They effectively operate 3 strong existing businesses.
Each pretty substantial on its own.
Right. The traditional in-cafe experience, the highly convenient drive-through, and their robust digital platform. But what's even more compelling is how quickly they're growing a 4th business. Delivery, yeah. This segment saw over 25% year-over-year transaction growth, and it appears to be highly incremental.
Meaning it's adding genuinely new sales, not just stealing from the other channels.
Exactly. Not just cannibalizing existing sales. Imagine ordering your favorite latte from your couch, having it delivered. That convenience is a powerful growth engine.
No question.
And when we talk about efficiency, it's not just a buzzword here. Their average peak drive-through times are actually under their own ambitious service goal,
Really? What's the number?
clocking in at an impressive 3.20 minutes across more than 7,600 drive-through locations.
Wow, under 3.5 minutes at peak across
Yeah.
that many stores. That's significant.
When you're stuck in that line, every second counts, right? Achieving that speed at scale is truly remarkable. Their digital leadership also continues to be a formidable strength.
Yap is pretty good.
It's consistently highly rated, delivers a smooth, intuitive experience. They saw non-discounted transactions grow among their nearly 34 million 90-day active rewards members.
Again, growth without relying solely on promotions.
Strong organic engagement. Plus, with over 65 million social media followers, they command one of the largest, most engaged social communities in the entire industry.
Huge reach.
These aren't just statistics. These are fundamental built-in advantages that position Starbucks uniquely and provide a rock-solid foundation for their ambitious Back to Starbucks strategy. Okay, so shifting gears now. The CEO focused on 3 critical areas for tactical changes, starting with improvements already implemented within their coffee houses. The goal here is restoring that essential Starbucks experience.
Getting back to basics, in a way.
Exactly. Early steps, which, you might have already noticed, include bringing back those much-missed condiment bars.
Oh, yeah. People definitely noticed when those went away.
Right, a point of frustration for many. They've also eliminated the upcharge for non-dairy milks, a clear response to customer feedback, a nod to inclusivity.
That was a big one, too.
Beyond the visible, they've implemented a new coffeehouse code of conduct. Sets clearer expectations for behavior in stores, creating a more welcoming environment for everyone.
Interesting. Defining the space.
And to ensure consistency, they're rolling out something called Coffee House Walk certifications. Now, what exactly do these certifications entail? Why are they so important for consistency across thousands of locations?
That's a great question. It speaks to their commitment to operational rigor. These coffeehouse walk certifications are essentially rigorous, standardized audits.
Audits, like inspections.
Yeah, imagine regional leaders literally walking through a store, conducting detailed inspections of everything. Cleanliness, ambiance, how smoothly the drive-thru operates, how genuinely baristas engage.
Every touch point.
Exactly. Every touch point in the customer journey, making sure it meets their newly elevated standards. It's not just hoping for consistency, they're actively inspecting and certifying it.
Systematically verifying it.
Right. And this top-down emphasis on operational excellence is further solidified by the Leadership Experience 2025. Back in June, they brought together a massive group, 14,000 coffeehouse leaders from across North America.
14,000 leaders, wow.
It wasn't just a motivational rally. It was a focused conference centered on reinforcing coffee, craft, connection, and opportunity. The goal was sharpening their commitment to customer service excellence.
So equipping the leaders.
Exactly. And the momentum from this event is cited as directly inspiring these leaders to drive transformation at the store level, ensuring that strategic vision translates into daily execution.
So they're pouring significant investment into supporting their leaders. That sounds incredibly inspiring, but the big question for any large company is, how do you take that inspiration?
And make it stick.
Yeah. How do you translate it into tangible, consistent improvements across literally thousands of stores, day in and day out?
That's precisely where Green Apron Service comes in. This is presented as Starbucks' most significant operational change, and it's planned to be fully scaled across all U.S. company-operated coffee houses by mid-August.
Mid-August,
Yep.
so very soon.
Very soon. It's described as a new foundational operating model, establishes repeatable, consistent, and scalable standards. Represents Starbucks' biggest investment ever in operating standards and customer service.
Biggest investment ever. That's saying something.
It is. If we connect this to the bigger picture, Green Apron Service is designed to standardize that elevated customer experience. It starts with 5 key moments like crafting connection as you hand over a drink,
Defining those interactions.
defining them, ensuring a more personal touch. It's also enabled by an evolved staffing model, fine-tuning roster sizes, labor hours, peak coverage, deployment.
Getting the right people in the right place at the right time.
Exactly. Minimizing those frustrating bottlenecks. And furthermore, they're rolling out Smart Queue technology,
Smart queue. What's that?
an advanced order sequencing algorithm.
Okay.
This isn't just, a fancy phrase. It's like the invisible traffic controller for every coffee order.
Okay, tell me more.
Imagine A highly intelligent algorithm analyzing every incoming order, drive-through, cafe, mobile, and then sequencing them in the most efficient way for the baristas.
Ah, so they're not juggling 5 complex drinks at once.
Right. They get a steady, optimized flow of orders, ensuring you get your latte in under 4 minutes. Even during the morning rush, it literally brings order to mobile order chaos.
That sounds like a game changer for the baristas and customers.
And what's truly impressive here is the early success of these pilot programs. It led to an accelerated rollout, way ahead of schedule, based on strong results from a 1,500-store test.
1,500 stores tested this.
Yep. Partner feedback has been described as tremendous, indicating real buy-in from the front lines. Coffee houses using Green Apron service have already driven measurable improvements.
Like what?
Transactions, sales, customer service times, peak transaction comps have started to grow, and all-day transaction comps are outperforming the broader North American portfolio.
Outperforming, so it's working.
Seems so. Specifically, where SmartQueue was deployed, there's been a double-digit improvement in cafe orders handed off in under 4 minutes. 80% now meet that target.
80% under 4 minutes. That's fast.
Drive-through service times consistently under 4 minutes. Mobile order and pay reported to be more accurate and on time. These early results are clearly instilling confidence that these substantial operational investments will yield significant returns.
Okay, so once you have that operational foundation shored up with something like Green Apron service, the next question is, how do you keep that momentum going?
Right, it's not just a one-and-done fix.
Exactly. It's not enough to fix what's broken. You need tools for continuous improvement. And Starbucks seems to have a clear roadmap here. For instance, Q1 fiscal 2026, they're launching the Grow Report.
The Grow Report?
Yeah,
Sounds like a scorecard.
pretty much. Designed as a simple, intuitive tool to help coffeehouse leaders zero in on 5 key drivers of same-store sales growth. It'll provide sharper insights, help them identify and improve outlier performance.
And incentivize them, too.
Yeah, it'll be linked to incentivizing retail leaders. This, combined with those coffeehouse walks we discussed, really signifies a fundamental shift in expectations for their retail leaders.
More time in the store, less time in the back office.
Exactly. Spending more time focused intently on operational excellence, top-tier customer service, rather than getting bogged down in admin tasks. And it's not just in-store ops. They're also rigorously looking at their supply chain.
Ah, the dreaded out-of-stocks.
Right. Keen focus on reducing those. Pilot improvements have already shown promising gains in item availability, meaning you should find your favorite syrup or pastry more consistently. Less disappointment.
That definitely impacts the customer experience. So beyond the processes and tools, what about the physical spaces, the coffeehouse portfolio itself?
Good question. The vision for every Starbucks is clear. Warm, welcoming, a place for connection, gathering, great seating, seamless mobile order access, drive-through where possible.
The third place concept, revitalized.
Exactly. To achieve this, they've intentionally slowed new builds and major renovations to prioritize the Coffee House Uplift program.
Uplift, so targeted improvements, not full renos.
Right. Targeting about $150,000 per store for these uplifts with minimal to no downtime, which is crucial.
Keeps the stores open?
The purpose is twofold. Quickly replace thousands of seats they had previously removed.
Bringing back the seating.
Yes, and introduce greater texture, warmth, a more layered design. Think comfy chairs, inviting lighting, materials feeling more residential.
Making it feel less transactional, more like a place to linger.
Exactly. This work is accelerating in NYC now, Southern California, in Q4, and by the end of calendar 2026, they aim for at least 1,000 uplifts across North America.
1,000 stores getting this treatment. That's significant.
Simultaneously, they've begun work on the Coffee House of the Future, new standalone prototype opening in fiscal 2026.
What's different about it?
Well, it has 32 seats, a drive-through, but the key thing is a roughly 30% lower build cost compared to previous models.
Lower cost,
Yeah.
but same experience.
That's the goal. Not cheapening the experience, but smart design, allowing them to expand into more markets profitably. Imagine a space that feels distinctly Starbucks warm, inviting, but designed for operational efficiency.
Balancing ambiance and speed.
Right. They're even testing a smaller format version, maybe 10 seats, under construction in NYC right now, expected to open in months.
Smaller footprint for dense urban areas.
Seems like it. This modularity means they can unlock growth in diverse locations where a traditional large store might not work financially. accelerating global expansion while maintaining the brand.
Smart. And what about their existing stores? Are they evaluating those too?
They are a comprehensive portfolio evaluation of North American stores by the end of this fiscal year. Goal: ensure the right coffee houses in the right locations.
Optimizing the network.
And as a direct result, they plan to sunset their mobile order and pick up only concept in fiscal 2026.
Really? Those seem like the future for a while.
They did, but the finding was they were overly transactional and lacking the warmth and human connection that defines the brand. Customers missed the third place vibe.
Interesting. So convenience wasn't enough.
Apparently not. They now believe their traditional community coffee houses with the boosted digital offerings and efficiency can provide the same convenience with a superior, more connected experience.
Shows they're listening and willing to pivot based on brand identity.
Definitely. It's abundantly clear when you put all these pieces together: Green Apron service, leadership investment, portfolio transformation. The goal is to fundamentally redefine and elevate the Starbucks experience for you.
Reestablish that barista-customer connection.
Bring back warm coffee houses with great seats, deliver drinks in 4 minutes or less consistently, right-size costs, eliminate slow menu items, and reduce reliance on deep discounts.
It's a lot of foundational work.
It's hard work, but it creates that stable, efficient operating platform. And upon that, they can build a massive wave of innovation for the future. That brings us nicely to the future. Starbucks calls it a consistent drumbeat of innovation, planned through fiscal 2026 across digital, loyalty, and of course the menu.
Right, building on that stronger foundation.
So what's their approach to bringing truly novel products to market now? And what can we expect to see hitting our cups and plates soon?
Okay, this is where it gets really exciting. Their new approach is incredibly disciplined. They're using a starting five methodology and a stage gate process.
Starting five stage gate sounds very structured.
It is. Think of starting five as their strategic focus areas, maybe premium beverages, functional foods, global flavors, new coffee experiences, that sort of thing.
Okay.
The stage gate process is their rigorous internal filter. Every new idea has to pass through checkpoints concept, barista feedback on executability, market testing, financial viability, before it sees the light of day.
So preventing those launches that just don't work in store.
Exactly. Preventing past issues of, throwing products over the wall from corporate ensures a higher success rate because the people making them help design them.
Makes sense. Co-creation.
Right. This robust pipeline is centered on premium coffee experiences, exciting non-coffee drinks, artisanal food for different times of day, and those function-forward modern offerings people want.
Okay, so what's coming first?
We're going to see the first major breakthrough from this starting five approach fairly soon. Protein Cold Foam is launching in late Q4.
Protein cold foam? Interesting. Cold foam is huge, right?
Immense, 23% year-over-year growth, so they're tapping into that trend. This adds 15 grams of protein to virtually any cold drink. No added sugar, and you can add flavor.
Tapping into the health and wellness trend, too.
Correctly. Responding to that demand for functional, healthier options that don't compromise taste. Looking into early calendar year 2026, expect a reimagined artisanal baked case.
Reimagined baked case.
Bowl.
Beyond just muffins.
Could be significantly elevated. Think more sophisticated, higher quality options pairing with premium drinks. Also, a bold new 1971 dark roast coffee coming to all U.S. company stores via their Clover Vertica brewers.
For the serious coffee drinkers.
Exactly. Appealing to coffee connoisseurs looking for a deeper, richer experience.
Okay, what else is further out in 2026?
Even more planned. Experiential beverages, think unique textures, visual appeals, flavor combos, and nutritious, satisfying bites, specifically targeting the afternoon.
Tackling the afternoon slump opportunity.
Right, a significant growth area beyond the morning rush. This month, they're starting tests of new coconut water-based tea and coffee drinks in select markets.
Coconut water. Okay, exploring trends.
Willingness to experiment. Upcoming tests also include gluten-free and high-protein food options, aiming for artisanal but meeting specific dietary needs.
More inclusive menu options.
And beyond individual products, new platforms for 2026 include global flavors, hinting at a more diverse menu, and customizable energy offerings.
Customizable energy, like add-ins.
Points to a more modular, adaptable menu. Tailor your drink to your needs. And of course, they'll continue to own their hit seasons like Fall Pumpkin Spice Latte and Holiday. Critical for traffic.
Can't forget the PSL. That's an undeniably ambitious roadmap. But how do you balance this relentless newness with operational simplicity and consistency?
That's the tightrope walk, right?
Especially with that 4-minute service goal, it sounds tricky.
It is, and that was a key point addressed. We can circle back to how they plan to manage that tension between innovation and speed. But first, let's talk loyalty.
Okay, good point. That huge slate of innovation needs that strong foundation. Speaking of assets, the Starbucks Rewards program, described as a huge asset, nearly 34 million 90-day active members.
Massive, highly engaged base.
And in early 2026, they're planning significant innovations for the program. Updates addressing key customer feedback, introducing new features to grow loyalty, brand love, deepen engagement.
Moving beyond just basic points for drinks.
Seems like it. The strategic shift is important. Moving away from a one-size-fits-all discounting model to one that truly recognizes and rewards loyalty and builds greater, more personalized engagement.
Personalization. So rewards tailored to your specific habits.
Imagine a program that truly understands your preferences, rewards your choices, not just generic discounts. That seems to be the direction.
Makes sense in today's market.
Beyond rewards, substantial digital enhancements, working on a brand new Starbucks app, and significant improvements to mobile order and pay.
Refining the digital experience.
Goal is improving the customer experience, particularly at pickup, ensuring accuracy and timeliness. This integrated approach, physical stores, operational consistency, robust digital innovation shows a comprehensive strategy.
Engaging customers across all touchpoints, wherever and however they choose to interact. And what really stands out here is how this back to Starbucks strategy isn't just a U.S. thing. It extends globally. The international business is truly a powerhouse.
That record revenue number was impressive.
Over $2 billion quarterly revenue for the first time ever demonstrates the global appeal, immense growth potential, and many of the U.S. changes, lower cost store builds, renovations, are designed to scale globally.
So accelerating growth in international markets, too.
Could significantly accelerate it, allows them to expand more rapidly and profitably. Let's specifically look at China.
Always a key market.
The near-term changes implemented there are paying off. Through Q3, China achieved its third consecutive quarter of revenue growth. Total comparable sales turned positive 2% comp and that impressive 6% transaction growth.
What drove that performance in China?
Multifaceted. Smart beverage innovation tailored to local tastes, new customization options that resonated, adjustments to non-coffee pricing which broadened the customer base, bolstered afternoon-evening sales,
And delivery.
and outsized growth in delivery, which is crucial there. What's even more intriguing is their ongoing strategic partner search in China.
Right, they're looking for a partner.
Significant interest, over 20 parties. They're evaluating options, committed to retaining a meaningful stake. This isn't about needing capital, though.
Oh, what's the driver then?
Finding a like-minded partner with a shared vision, values, someone who deeply understands local nuances. Goal is collaboration on more effective local operations, shared growth vision.
Aiming for how many more stores?
Thousands more Starbucks locations, ultimately making China one of their best businesses globally. It's a long-term strategic play.
Okay, so China's a big focus. What about other key markets?
Momentum isn't limited to China. The UK showed continued momentum, low single-digit comparable sales, driven by connection, beverage consistency, food innovation, strategic labor investment.
Getting the basics right there, too.
Yeah, positive trend across EVA, Europe, Middle East, Africa as well. Overall, Q3 revenue and comps up year over year, even in Turkey. Despite a challenging economy, business is strong. Opened their 750th store there.
750. Wow.
Yeah.
Resilience.
And Latin America maintained double-digit year-over-year growth in system sales, revenue, operating income. Mexico nearing 1,000 stores, serving as a roadmap for profitable growth in the region.
That global diversification is definitely a strength.
Insulating them somewhat from individual market fluctuations, and the tailored market strategies seem key.
It's fascinating how lessons learned in one market can be applied globally. Now, to tie all these operational and global developments back to the financials, the CFO, Cathy Smith, expressed clear confidence.
Emphasizing pace, urgency, encouraging pilot results.
Right. So let's quickly recap the Q3 consolidated financials again. Revenue, $9.5 billion, up 3% year over year, driven mainly by 6% net new store growth, offset by that 2% comp decline.
Okay, and the margin.
Operating margin, 10.1%, contracting 650 basis points from prior year, primarily due to those big back to Starbucks investments, labor hours, that leadership experience event.
Right, those costs hitting the margin.
General and administrative, G&A, expenses up 18%, also due to the leadership experience.
So as a result, earnings per share.
EPS was $0.50, down 45% from prior year. Reflects that expense deleverage and those substantial investments. The effective tax rate was also higher this quarter due to a discrete tax item.
A one-off tax event.
Essentially, a one-time unusual tax event not expected to recur, often related to adjustments for prior periods or specific non-recurring transactions. This, plus the leadership event, accounted for about $0.11 of the Q3 EPS decline year over year.
Got it. So some temporary hits to EPS.
Despite these near-term impacts, the company remains committed to disciplined capital deployment, maintaining a strong balance sheet BBB plus AGA Baa1 credit rating,
Still investment grade, solid footing.
and continuing to return cash to shareholders via dividends. It's a delicate balance, isn't it? Investing heavily for the future while managing current performance and rewarding shareholders.
Absolutely. So with these investments in mind, what's the outlook? Short and long term.
For Q4 outlook, management is taking a conservative stance. Ongoing initiatives, uncertain consumer environment. Seems prudent.
Managing expectations.
But they are expecting a strong fall platform, notably the return of the pumpkin spice latte, always a traffic driver.
The PSL bump.
While transactions are improving, the net impact on Q4 is still unclear as Green Apron service and other changes continue rolling out. Looking further out, though, clear confidence for 2026.
Expecting continued improvement as the strategy scales.
Exactly, as the benefits become more widespread.
What about external factors like commodity costs and tariffs?
They're actively navigating those. The tariff environment's dynamic, but they're mitigating exposure outside green coffee via sourcing and trade practices. On coffee, prices are moderating, and they've increased their hedging coverage.
Locking in prices.
Yeah. Due to their buying practices, they expect year-over-year coffee cost increases to peak in the first half of fiscal 2026. There's a natural lag for market prices. This proactive management helps buffer them.
Good risk management. Now back to margins, that investment versus return question. Near-term margins are impacted.
Definitely. By critical investments. Over $500 million in additional labor hours for the U.S. company stores over the next year, starting with Green Apron service.
That's a huge labor investment.
But the early signs of progress partner engagement surge, transaction growth, positive customer feedback instill confidence these investments will ultimately yield much healthier margins over time.
Investing now for future profitability.
And it's part of a comprehensive cost structure reset, focused on a healthier, more efficient structure across the entire P&L cost of goods, operating expenses, G&A.
A multi-year effort.
Spanning 2026, 2027, 2028, designed to offset investments, weather macro headwinds, and fund the growth strategy. They also confirmed an investor day for Q2 fiscal 2026 to share long-term plans.
Okay, so more details coming next year.
The belief is these efforts will visibly come together by the end of next year. Financial performance comes first, then earnings following suit. It's a strategic long game.
Definitely playing the long game.
That's a powerful vision. Now, let's dig into some specific analyst questions from the call, because often these reveal deeper strategic thinking, nuance.
Yeah, beyond the prepared remarks.
One analyst asked about cost offsets for that huge labor investment. $500 million. Well, they didn't quantify it precisely. They said lots and lots of opportunity across COGS, operating expenses, G&A. Can you elaborate? What might those look like?
Absolutely. When they say lots of opportunity, it suggests a holistic approach. It's not just quick cuts. COGS side.
Yeah.
Maybe optimizing supply chain further, better supplier contracts, more efficient farm-to-store logistics.
Okay.
Operating expenses. Making stores run leaner without compromising experience. Optimizing utilities. Better waste management. Streamlining in-store processes. And G&A examining corporate overhead.
So finding efficiencies everywhere.
It's an ongoing systemic effort, aiming for durable, sustainable improvements compounding over the next few years, funding growth from within, even while investing heavily in labor.
Makes sense. Another key question. Margin recovery targets. Could they return to pre-COVID 2019 levels? 17% corporate-wide, over 20% in the Americas.
That's the benchmark people look at.
The CFO said 2019 is a good guidepost, an aspiration. But the CEO, Nicole, added something compelling. He doesn't believe Starbucks over-earned previously, sees tremendous opportunity to not just achieve, but maybe exceed past performance.
Exceed. That's ambitious. What does that tell us?
It suggests he believes pre-pandemic margins were a fair reflection of operational excellence, not some inflated anomaly. His confidence in exceeding them is rooted in building a fundamentally better Starbucks.
Upgrading, not just restoring.
Exactly. Stronger operating foundation from Green Apron service,
Yeah.
disciplined innovation, multi-year focus on cost structure. He envisions the company more resilient, more profitable than ever.
Aiming for sustainable profitability driven by fundamental improvements, not just a cyclical recovery. Strategic perfection, almost.
Analysts also probed the drivers of sequential transaction improvement, especially since Green Apron service isn't fully system-wide yet. What's driving improvement right now?
Good question. They acknowledge GIS isn't fully rolled out. Current improvements are due to a combination of factors. Better overall system operations, clearer expectations around those 5 key moments, bringing back condiment bars, speed targets, better supported by training,
Cumulative effect of smaller changes.
and more effective targeted marketing, leading to increases in both non-discounted rewards and non-rewards customer transactions,
Broad-based improvement, again.
indicating it's driven by both loyalty and new customer acquisition, even before the full impact of major overhauls, tighter operations, smarter marketing, renewed customer focus combined.
Okay. And on food innovation, learnings from Canada, UK. They plan to leverage successes from their global portfolio. 40,000 stores. Examples. How does this global learning work?
Huge competitive advantage. They cited specifics. Waffles, pancakes, bagel bites successful in Canada. Enhanced, more premium baked cases in London.
Taking what works elsewhere and adapting it.
Exactly. Not just copy-paste.
Yeah.
Identify what works, understand the why, then adapt and reapply where it makes sense globally. Leverage insights from their vast ecosystem, accelerate innovation, reduce risk.
Smart way to avoid reinventing the wheel.
Yeah.
Now, the Green Apron service rollout, expedited due to strong pilot results. How did those pilots influence the acceleration, and how are they measuring ongoing success?
Pilots were overwhelmingly positive. Operational efficiency improved, hiring, training, labor deployment, the accuracy and speed from SmartQ. Critically, pilots showed positive transaction movement in morning and full-day peaks.
Direct signal customers responded well.
Gave them confidence to accelerate. Moving forward, success measured by a new growth scorecard. Customer experience scores, optimized staffing, speed of service, especially heading into high-volume times like PSL season, building a robust, measurable system.
Got it. A really insightful question addressed U.S. business challenges. Competition, high penetration, value perception. The CEO's response was illuminating. Greatest challenge, primary focus, is driving and maintaining a valuable brand perception. What does that mean in a competitive landscape?
It means their differentiator isn't just coffee, it's the holistic experience, the emotional connection. Nickel emphasized value perceptions are at 2-year highs, efforts working. His core belief, the best form of Starbucks, world-class service, barista connection, third place, beverage craft, is the true differentiator.
Playing offense by focusing on their core strengths.
Exactly. By delivering that consistent, premium, human-centric experience, they believe they can overcome saturation and competitive pressures, reinforcing why customers choose Starbucks despite price, being indispensable, not just accessible.
Finally, that tension between innovation and operational consistency, core principle. New innovation cannot negatively impact speed, those 4-minute times. How are they ensuring this with rapid product development?
Direct lesson from past challenges. Complex menus slow things down. Their new Starting 5 and Stage-Gate process address this specifically. New products are co-built with baristas,
Baristas involved from the start.
giving them direct say in design, executability, ensuring items can be consistently efficiently prepared within time targets. Clear departure from throwing it over the wall. Menu simplification was also vital, clearing unproductive items, freeing space time for meaningful innovation that can be executed effectively.
Makes sense. And value in new products, future pricing.
New products designed for specific day parts, occasions, maybe varied sizes or price points within their premium positioning. But pricing remains the last lever the CEO prefers to pull. Used only when necessary, least amount necessary. Emphasizing value and experience over just raising prices. #tag outro. So if we connect all of this to the bigger picture, what emerges is a very clear understanding that this is a multi-year turnaround effort. It's definitely not a quick fix or a single quarter's victory.
No quick wins here.
No. However, the detailed foundational changes happening right now, Green Apron service, strategic portfolio uplift, disciplined innovation, are all intended to build a stronger, more resilient business. The focus is intently on what they can control.
Operations, customer experience, innovation.
Exactly. To drive growth and ultimately build an even more beloved brand, even amidst those external macroeconomic pressures. They're strategically positioning for long-term success by getting the basics right first, then building boldly on that refreshed foundation.
That brings us to the end of our in-depth look at Starbucks' Q3 2025 earnings call. We've seen how they're making significant investments, implementing this comprehensive strategy.
From in-store ops with Green Apron service to reimagining physical spaces, launching new products, digital features.
It's clear this is more than just a quarterly report. It's really a detailed blueprint for a brand aiming to strengthen its core and innovate for the future, all while trying to reconnect with you, their customer, on a deeper level. The question now for all of us is, will these ambitious plans truly bring Starbucks back to its best? Or maybe propel it into an entirely new, even stronger chapter? Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.